Alrighty, good morning, everyone, and happy Monday, April 24th. So good to see you all here today. As we start off a new week, I want to take it out a little bit and help us keep an eye on the bigger picture as far as our trading goes. We need to understand the daily chart as our foundation for how we're identifying our trade opportunities. I know a lot of what we do in our daily sessions in live trading focuses in on the smaller time frames, where to get in and where to get out of trades, but we do need that daily perspective to understand where are the key trade opportunities lying and where are we looking for those better opportunities on some charts versus others. So I'm going to be going into more detail on that during today's session. So trading tip of the day, using the daily time frame as your foundation can help you determine whether to go long or short based on the 2-candle flip. So for example, not 3-year bonds, actually 30-year bonds was one that I saw setting up yesterday as we opened up in the futures market open at 6 p.m. Eastern Sunday evening. So again, take a look at the daily charts as you prep for each trading day. 6 p.m. Eastern is when the futures market opens. If you do have those 2-candle flip setups on your daily chart, higher probability to find those trade opportunities in trading in the direction of the 2-candle flip. So to point that out, if I come out over to, let's see, crude oil as well. Crude oil, daily time frame. This one's going to be the spotlight trade as well. But take note of how we ended our session on Friday was with a 2-candle flip. So if I just mark that from the high of the red candle to the close of the body, that is our 2-candle flip. Now, what that 2-candle flip tells us is that the following day, when we have a 2-candle flip, we're looking for short trade opportunities. And you can see on crude oil, we're already down 0.64%. So again, a lot of this information does happen and occur once we open in the futures market at 6 p.m. Eastern, which gives us some of those longer running trade opportunities. So we should have already been participating in this with our short trade. Another odds enhancer here is looking at this giant wick to the left-hand side. So this is going to be a topic I'm going to go into more detail today as we start getting more students joining the live trading sessions, is understanding what those wiki areas are. And pretty much, just to sum it up, it represents those areas where we see those long wicks either pushing price down or pushing price up. When we can find a 2-candle flip that is inside one of those long wiki areas. This one's a really long one, but some of the ones down here are a little bit easier to see. This would be an example of where we have those long wiki areas on the top side. Let's see. Was everyone able to get the Zoom link? Let me just see. I'm going to send out the email one more time. Give me one moment. Okay, I see more people coming in now. Okay, so let's keep going. So again, if we see some of those long wicks, better examples when we see those wicks on the bottom side down here pushing price up, that shows that this is where the buyers are coming in. We look for our 2-candle flips located down here, pushing it to the upside. Same thing on the top side is if we have those long wicks on the top side pushing price down, 2-candle flip in it, then that's an odds enhancer to look for our short trade opportunity. So I mentioned bonds on our prep screen for the long trade, but notice how bonds also up 0.41% as of this point. So pretty big up day. And where this started was a 2-candle flip. So again, if you're one of those people who wants to simplify your trading, taking it out to the bigger picture timeframes is going to help you in just understanding which trades to take in what direction. So on bonds, we had our red candle coming down. green candle closing within the range of the red candle. 2-candle flip there. You can see that that led to the next wave to the upside. So again, keep an eye on those 2-candle flips. Higher time frames are going to be better for finding those turning points and giving you a better perspective as far as what direction to take your trades. So that's the trading tip of the day. News and economic events. What's the news? More focused on Tesla today. We can see S&P 500 futures gain after Tesla's China gambit. And then for economic reports and events, not a whole lot going on for today for market moving reports. We just have Dallas Fed manufacturing survey at 10:30 Eastern. Let's jump out to Econo Day though. All right, so the ones that we want to pay attention to are the ones with a red star or a green diamond on it. Typically, those are the ones that are going to cause the most volatility. So to help you out today, we don't have any of the markings with the red star or the green diamond. Tomorrow, though, going to be a little bit busier. We'll have Chicago PMI and consumer confidence. Those are big market moving reports. Tomorrow will also be the employment report, JOLTS, construction spending, let's see, oil report, and more importantly, the FOMC announcement. So FOMC announcement is one of the bigger ones that causes significant volatility in the markets, followed by the Fed chair press conference. So we may see a little extra chop and volatility today as we prepare for the FOMC announcement later this week. And then also Thursday, Friday as well. Thursday, we've got jobless claims. Friday, we have employment situation. It's going to be a very, very busy week. And just make sure that you're aware that a lot of these economic reports do come out at 8:30 a.m. Eastern time. So the days that we do have live trading, there are going to be economic reports coming out 30 minutes prior. Let's see. I'm just making sure everyone was able to get in. Maybe 1 second. Okay, there we go. All right, back to our prep screen. Okay, so let's see. Spotlight trade mentioned crude oil. We went over that one already with the 2-candle flip and the move to the downside. So that also gives us perspective as far as us wanting to look for more short trade opportunities as crude oil is pulling back from that 2-candle flip. So again, keep an eye on the 2-candle flip. It gives you an indication of market direction. So now we know for today's session, we're going to be looking for more of those short trade opportunities. And then our equity index grid has been updated based on our 2-candle flips, S&P, NASDAQ, Russell, and Dow. So let's come out. We'll start with some of the products that we've already mentioned. Let's see, bonds. Bonds is in more of a downtrend, so making lower highs and lower lows. What I like about this 2-candle flip is the location of it. Now, can anyone in the room tell me why this location of the 2-candle flip is higher probability for at least a short-term move to the upside? Who can tell me? So this 2-candle flip here, we're already at 0.36% today, so decent move already. What about the location makes this a little bit higher probability? Tim says low on the curve, absolutely. So we're down after a significant move lower. Yeah, Patrick nailed it. Below support as well. Remember, those 2-candle flips work best when we locate them below support levels. So if you find a support, relatively a narrow range where price has been hitting those buy orders several times, breaks down, followed by a 2-candle flip, that's when we look for more of a reversal to the upside. Just take a look at some of the previous ones that have had that. This one over here I can see pretty well. So here we had support, price broke down, 2-candle flip, and then this one led to pretty decent wave to the upside. So that's what we're seeing here is support, 2-candle flip below support, as Patrick mentioned, also low on the curve, and then we look for that move to the upside. This one I'd say it's a little bit trickier. I would say wanting to stay in it more short term, just because the trend is down. Also, there's a tremendous wicky area on the top side, which again is just those wicks pushing price down or pushing price up. I did get, actually, let me go to the next couple screens. You also may have seen this from our email that I sent out last week as far as some of the highlights from the trades that we did on Friday. So I just wanted to go over them briefly as we start today's session as well, and kind of honing in on those key things that we look for, which are the 2-candle flips as well as the wick areas. We had 3 successful trades on Friday, if you recall, and we're in that session, but all of them based on the wicky areas and the 2-candle flips. So crude oil, we took a short trade, if you recall, based on finding that wicky area on the top side. Again, that's just a general way to view the price charts as far as if you're seeing a lot of wicks pushing price in one direction. In this case, we had a lot of wicks on the top side pushing price down. Then that was an odds enhancer to look for short trade opportunities. The wicks tell us that the sellers are in control here. We want to look for our short trades. So we took a successful short trade on crude oil. S&P 500, after that breakdown, we had a 2-candle flip. And this one we got out sooner. I was a little bit nervous of this top wick up here. However, we did have that 2-candle flip below support. That led to our long trade to the upside. And then on copper on the 1-hour time frame, we took a short trade on a pullback to our 2-candle flip. Price rallied up into it, had the next move to the downside. That 2-candle flip for our short trade was above a support level, which meant that the location of it was in a little bit higher probability area. So short trade, long trade, and another short trade, all based on those 3 odds enhancers. Just to briefly go over wiki areas, I know not all of us were able to attend the Master Trading Strategies 3-day event, but just wanted to briefly go over this for the new students in the class who weren't able to attend, and just explain what those wiki areas are in more detail. So identifying wiki areas. Wiki areas are areas on a price chart where the buyers are in control, strong support, and where the sellers are in control, strong resistance. The long wicks at support or resistance show who is in control. So this can be used on the higher time frames, the lower time frames. I like using it on the higher time frames to start, and then kind of zooming into the smaller time frames to find the entry points. So here you can see a couple areas where price rallied off of the green boxes, which show strong support. And what's inside those green boxes are those long wicks on the bottom side, showing that the buyers are in control. Here's a little bit more of a close-up. Buying wiki areas, look for the 2-candle flip buy zones. So again, if you see those wiki areas, you see price come down into it and form a 2-candle flip in a wiki area, that's the odds enhancer you want to look for to gauge the next momentum move to the upside. Same thing on the top side. Here we dropped it down to a 4-hour. So that if you see the wiki areas on the top side, you look for your 2-candle flip, and then that gives you the indication to look for short trades. Had a couple quizzes, but just to kind of go through them again, using those wiki areas to show who is in control can help you stay with a trending move. So if the markets are pulling back and you see those top wicks pushing price down, those are those wiki areas indicating selling pressure. As price is coming down, look for those drops into our buying wiki areas for long trade opportunities. Another example here, price dropping, a lot of wicks on the bottom side, and then the top side as well. I just wanted to incorporate that as we focus in on today's session, and why looking at bonds, huge wick here on the top side. So even though that 2 candle flip is working for a little bit, I would say keep an eye on what's up above as well. With the trend being down and price, you can see just tapped this wiki area, we may be getting more of a pullback now. So keeping that in mind, let's come down to a 1 hour time frame. Any questions on wiki areas or our trades from last week? Questions, comments, concerns? Okay. So again, the wiki area looks a little bit more confusing as we go down in time frame, which is why it's good to isolate it on the higher time frames before zooming in, and then to find our trade opportunities as price is coming down from that wick area, we'd be wanting to look for short trades. So our entry is going to be a 2 candle flip above resistance, looking for a fake out breakout. Let's see. On the 1 hour, we have resistance. Price broke out. This could be a fake out breakout. I would say if price starts to break below this support, then this is likely that fake out breakout back to the downside. 1 hour is a little bit too much detail. I just want to take it up a time frame. Let's see. One of my students was looking at the 12-hour time frame the other day, so let me just see that real quick. Okay. I do like the 12-hour. I may start looking at it more often. All right, so 12-hour time frame, a little bit easier to see. We've got resistance. We have a breakout, got a lot of the long traders in. It came up into our wiki area on the daily chart. So now if we're looking for a short trade below that green box, what is that entry point called? Who can tell me? When we have a breakout, price breaks above, and we've got 2 green candles coming up. We're looking for that flip back to the downside. What is this called to go short below this low wick of the green candle? Nice job, Julius. Yeah, wick over wick reversal. So this wick over wick initially was what caused the breakout to the upside. So if we're going to look to go short on a reversal, trading with the trend, then that would be our entry point, and that's what we call the wick over wick reversal. Nice job, Julius. All right, so then from there you could set up your entry. Short trade would be below 114.02 is that low. I like to do just one tick below to get a little bit more confirmation of a reversal. So let's set up that one. 114.01 will be our entry. And then to find a place to manage your stop, typically I'll use the last pivot before the breakdown or a 2-candle flip. We can go down in time frame a little bit just to see where a good spot to place our stop would be at. An hour, 8 hour. Down to the 1 hour. Right now, I would say we'll stick with the wick over wick for our risk management as well. So I'd say we'll place our stop up here as of this point. we could always bring our stop down as price starts moving in our direction. So stop is going to be above this wick over wick to the downside, which is going to be above 114.13. So again, our entry 114.01. This is going to be a sell stop order since we're taking a breakout trade. Sell stop is only going to get us in on the trade when we break below 114.01. And then our buy stop is going to be above a previous wick over wick, 2-candle flip, pivot point, just kind of what ends up panning out on the price charts. So right now I'm going to place it above this wick over wick, which is going to be above 114.12. Okay. So sell stop for breakout trade 114.01, buy stop 114.12. I'll send that out. So let's see, how much risk is that? 114.01 to 114.12. Remember, we always want to calculate risk ahead of time. So on this trade, we would be taking, if I come down to the drop down, click on the futures tab, and see that the tick value is $31 per tick. So from 114.01 to 114.12 is 11 ticks. Remember, it's always good to do this just to see if it fits within your risk parameters. So 11 ticks on bonds at $31 per tick, 31.25. So about $341 of risk on this trade. This is where 30-year bonds can get pretty risky really quick just because the tick value is $31. So each tick up or each tick down, whether in your direction or against you, is going to be moving $31.25. So keep that in mind. Breakout trades may be a little bit more elevated risk based on where you're placing your stop. You can either choose not to look at 30-year bonds, or you can look to take zone trades as price comes back to your 2-candle flip areas. So just keep that in mind, but wanted to kind of walk through the process of how we start on the daily chart to then ultimately zooming down to the smaller time frames for our entry points. Let's see, so that is bonds. We're looking at crude oil as well. Daily time frame. So that 2-candle flip, we're down 0.62%. So we're looking for short trades, trading in the direction of the 2-candle flip. Coming down to a, let's see. Bring it down to a 12-hour. If you're kind of working through the step-by-step process, I would say just take it down kind of one time frame at a time so you can start to see the process of how price is changing direction. Now let's see, right now came down to a 12-hour. See, price came up into our wiki area. Looks like we tested the daily 2-candle flip. It's pulling back. But right now I'm possibly looking for a breakdown of support. I would just want to get a little bit more detail. There is some minor support here, holding price up. Possibly going to be looking for a breakdown below this support, trading with our daily 2-candle flip. Let's see, there's also a big wick on the top side you can see, so a lot of selling pressure coming down. From a 12-hour, let's take it down to a 10-hour. Not much changed. Let's try an 8-hour. And the same thing there. Let's kick it up a notch. Just go down to the 4-hour. 4-hour, giving us more detail of that support level. Right, markets are open. You can see that the 2 wicks that we saw before, now we're seeing multiple touches of the support. Just showing that this is really where the buyers are holding price up, in which case we'd be looking for a breakdown below support to trade in the direction of that daily 2-candle flip. That's probably where I'm going to be right now. Let's see, it's come down to a 1-hour. 1-hour looks pretty volatile. Big move to the upside, big move down. Holding this support here. All right, so we're still holding that support. Say we only be looking to take that breakdown of support once we break below all these wicks down here. That's going to be below 82.96. To the top side though, we have a, let me guess and see who can figure out the answer for this one. So where we had price test here, price test here, price rallied, and then we broke down. What do we call that pivot point before that breakdown? Let me zoom in. What do we call the pivot point before a breakdown? I'm going to remove some of the lines. So what's in this pink circle? What do we call that? We have support, support breakdown. Because we notice price stopped here, huge drop back down. Price stopped here and moved down because it hit this pivot. What do we call that? Anyone remember from one of the previous classes we've done? Good job, Patrick. Yeah, so that's what we call the controlling breakout pivot. All it is that last bounce before a breakdown. You can see we had support, support, rallied, breakdown. So that makes this area our controlling breakout pivot. That's where you can look for some of your zones. On the top side, we do have a 2-candle flip here. That's why price is stopping here, changing direction back down. So if price comes up a little bit deeper into that zone, we can look to take it for a short trade as well. And leaning more towards the short side today for crude oil. Short trade entry on a 2-candle flip in a controlling breakout pivot. That here, 2CF, 2-candle flip in controlling breakout pivot. Short entry is going to be 83.88. Stop at 84.11. I'm keeping an eye also on the breakdown of support. So if we start to break below this low area of support down at 82.96, then I'll be looking for the next breakdown. So breakout trade down here, supply zone trade is going to be up here. And meanwhile, we're right in the middle between the two, so this is one that we'll just want to keep an eye on during today's session. All right, let's come out to the equity indexes. Huge move to the upside. Let's see, we're already at 0.41%. Again, daily chart foundation. So what we saw on the daily chart, just kind of walking through each day, is that we had a 2-candle flip down here back from April 22nd. That 2-candle flip was lining up with the wiki area to the left. Mention all those wicks down here. We're matching up with each other, so showing that there's a lot of buying pressure. Price rallied, pulled back down into a 2-candle flip on the daily chart, showing buying pressure. And then as price rallied, you can see we're forming those wick over wick continuations to the upside. So we're looking to stay long on the equity indexes. We've got opposing zones, however, not really looking to go short until we get a strong daily 2-candle flip or wick or over wick reversal pattern. Till then, market's moving higher. We don't want to look to be picking tops until we get closer to some of our sell zones. The area where I'm generally going to be looking for short trades is right up here where we have support and then we have that breakdown. Here is that last pivot before we broke down through support. So once price starts getting up to 51.75, about 20-25 more points higher, then I'm going to be looking for some selling pressure at that point. But till then, we should be looking to take it to the upside. Coming down to, let's see, let's do a 4-hour. You can see again, still a lot of buying pressure. We're getting those breakout trades to the upside. And we have a 4-hour 2-candle flip that was just formed. That's going to be 51.45, stop at 51.34. For our day trading side of things, let's come down to a smaller time frame. Down to the 1 hour. Okay, so we've got our 2-candle flip down here. This is the one from our prep screen. And then we also have another one that was just formed in the overnight session. Got a 2-candle flip here. Entry 51.41.25. Stop at 51.34.25. A couple other odds enhancers here is that it's below a support level. Patrick mentioned this one before. We have support, breakdown, 2-candle flip. That would have been where we'd be looking for our long trade to the upside, or we can take it as a zone entry as price comes back down. But right now, no way to really jump in on a long trade. Seeing a little bit of selling, so we want to wait for price to pull back to our 2-candle flip zone. Odds enhancers if price drops down into it on the 1/4 hour, which would be 9:45 Eastern, or the 10 o'clock reversal time, 10 a.m. Eastern. Those are some key times where we look for price to change direction. Let's see, we're coming back down now. Let's see whether to set up the long trade yet. Let's take a look at some of the other equity indexes. Just see where we're all moving. So S&P, big rally followed by a lot of selling pressure. Dow as well, huge breakout, decent amount of selling pressure. NASDAQ, same thing, huge rally, a lot of selling pressure. And Russell, huge rally, selling pressure coming in. NASDAQ's looking pretty bearish, so it looks like we had a resistance breakout and now it's flipping back down. Decent amount of selling coming in. Before we set up a long trade on the S&P, oh, and then do keep an eye on crude oil and bonds as well, which we're getting ready for those ones. Some of the products may give us a little bit better setups. I know equity indexes are going to be a little bit choppier this week just because of the FOMC announcement. Let's go over to the NASDAQ for a moment. All right, so seeing a decent amount of selling coming in on the NASDAQ. Who can see why? Just on the daily chart, why are we seeing a pretty significant amount of selling coming in, which is causing the NASDAQ to pull back? Selling pressure that we're seeing on the NASDAQ, what could we correlate that to? Good job, Dwayne. Yep. Y'all, and everyone see the wicks on the left-hand side? That is the wiki area that we talked about previously. So all these wicks on the top side showing selling pressure, price rallying up into those wicks, showing that sellers are in control over here. We should be a little bit cautious going long on the right-hand side of the chart. Our entry would then be a wick over wick reversal, 2-candle flip, all the things we do day in and day out. So let's see, and keeping that in mind, come down to 1 hour. Go down to a 15-minute. Wow. And there was our entry. So here we had support. Support breakdown, huge wick area on the top side. So price coming back down now, needing to find another entry point. Let's see. So we've got our 2-candle flip here. Let's say breaking below this would give us a little bit more confirmation. Just because that is where we had price gap up in the overnight session. We may see a little bit of a bounce here. Instead of going short too soon, I would say just because on the NASDAQ, we do have a lot of this basing area here with high volume. Instead of going short too soon, maybe waiting for a new 2-candle flip to form or another wiki area, and that would give us a better entry point. But yeah, NASDAQ, I am pretty bearish at this point, also because we had a fake out breakout. Notice the top side, we had resistance, popped above, got a lot of the longs in before just flipping back down. That is our reversal pattern. So I'm not going to take the long at this point. We could, let's see, we're 3 minutes before the quarter hour. There may still be some unfilled orders here, but I would just be, again, cautious because the higher time frames are showing us that we rallied right up into, as Dwayne mentioned, that wiki area. So we are seeing some selling pressure coming in. Those higher time frames can also help you to identify whether you want to take a long trade or whether you may want to wait and ultimately look for the short trade entry. The NASDAQ, I'm going to hold off for right now. Over to the S&P again. S&P didn't hit a wiki area. We are pulling back a little bit. 1 hour. Yeah, so again, I'm not going to take that 2-candle flip that I mentioned before, even though we had support, 2-candle flip breakout, because how it's approaching that zone is that it's coming in with a lot of selling because we had a resistance, breakout, and now it's coming back down. So I'm actually going to be looking for short trade opportunities. It's coming down fast. Let's come down to a smaller time frame and just see if we can get some sort of an entry point. But the gap is kind of throwing me off in our zone below. Take a look at the 1 minute. Let's see. So we had a breakdown a little bit higher up. Right here, we could see where we had that support breakdown. Now let's see. Next area of support. Not really seeing it. We're getting a little bit of a bounce up right now. Yeah, no real good entry for a breakdown at this point. Let's go up to a 5-minute. How about just waiting to find the right picture? And being a little bit trickier just because we do have that gap up from the overnight session. Take a look at the other equity indexes. We'll come out to the Russell. Oh man. Anyone get our 2-candle flip zone on the Russell? Popped right into that. This was our prep screen zone at 2028.2. Stop at 2035.9. Just tapped into it, pulled back, and you can see why price stopped here, pulling back, and going back to that wiki area on the left-hand side. This setup's looking pretty interesting on the Russell that I'm liking. I'm gonna go out to the micro Russell just because it can get kind of messy on my main Russell screen, but take a look at the M2K daily. What do you guys see here on the Russell daily time frame? Let me see if you guys can see it. So take a look at the micro Russell or even the Russell chart. You see how price broke out here. Just tell me what you guys are seeing that's leading you towards how you're going to trade the Russell. Any and all answers, guesses? But this chart definitely stands out to me. Is there anything that you guys see? Thanks, Dwayne. Let's see. Wicks, 2-candle flip. Absolutely. So we've got all these wicks over here. A lot of selling pressure. Very wicky. Selling pressure coming in. See, 2-candle flip. We had one to the top side, so price did break out higher because of this 2-candle flip. 2-candle flip, price broke out, but it didn't give us a whole lot of room to run because we just rallied right up into that wiki area even further. But let me annotate this how I would on my own charts, is that I would see here we have resistance. Mark that with a pink box. Resistance. Price broke out to the upside. It went deeper into a wiki area to the left, which is right over here. So we broke out, got a lot of the longs in. They're feeling a little bit of selling pressure coming in and getting pretty nervous, I'm sure, after that breakout, because now we're pulling back a bit. And now what we see could be forming is a wick over wick reversal. You guys see that on the Russell? So as we map up how we're going to trade the Russell moving forward, I'm seeing resistance, breakout. That is a fake out breakout potentially. Our entry is going short below the low wick of the second green candle, which would then lead to a longer running reversal. Because the only reason why price is being held up right now by the buyers is because this is where the buyers pushed price up for that breakout. Therefore, price breaking below the screen box, we'd be looking for a longer running reversal. I'm going to be really keeping an eye on the Russell. Hey Tim, is that also a gap up from the previous day? Yes, I believe it did. I think most of the equity indexes, yes, they did gap up. So here was the prior session's close. We did gap up by about 3 points or so. Again, a lot of buying pressure coming in, gap up. So the gaps show where the largest order imbalances are. That gap up is leading towards a decent move to the upside. We did rally from 2018 to 2031, so about a 13-point move higher. Could have taken a long trade there. But now can you imagine that if price breaks that gap, that's going to be a pretty strong reversal pattern. So let's keep an eye on the Russell. Potential short trade below that daily wick over wick reversal. I just want to take it down. Yeah, this one's a good setup. I'm liking it too, Patrick. Let's see, 4-hour time frame. You can see how that setup looks is just this little bit of basing that's holding price up. That's where we'd look for our reversal once we break below it. I'd say you can look to get in sooner if we start to get those price patterns on the smaller time frames. Now, I would say possibly we could do a wick over wick reversal on the 4-hour if we broke below this low wick here. It's got 2 green candles going up. That would be the wick over wick reversal short. It's just it may get a little volatile coming back down into that support area. Let's come down to a 1-hour. Try a 15-minute. The selling pressure really is coming in. I'll look to get in a little bit sooner. So our daily entry is going short below this black line. From the 1-hour and the 4-hour, we'd be looking to get in short up a little bit higher, which is leading into a little bit of a support area. So I'd say breaking below 2020.3 would be our short entry for a reversal. And then we'll place our stop based on when we get the previous 2-candle flip. You can either stay on the 15-minute or you can go back out to the higher time frame, whichever you prefer. But let's set it up on the 4-hour. Keep it clean and easy to see. Short entry below that wick over wick for the reversal. Going to be below 2020.5. Sell custom with stop. 2020.5. And then our buy stop is going to be, you can either base it upon your risk management. You can use this high wick here. I'm just going to place it using this high wick right now, which is going to be about 2031. And then I'll move my stop down once we get into the trade based on the previous 2-candle flip on a smaller time frame. So sell stop 2020.5 for a reversal back down. Buy stop using this wick up here, 2031. And then that's it. Nothing else to do on the Russell. Yeah, I do like that setup for a potential reversal, especially if all the other equity indexes are going to start pushing lower. You can see our daily setup is going to be using that wick over wick where we had the gap up that Tim mentioned. Let me just take a look at the indexes. Well, yeah, see selling pressure still very much coming in. That's why we didn't take the long trade on our 2-candle flip zone. You can see it got a bounce off of it. It would have been good for about a 10-point move up, but now we're seeing the selling really coming in. And that selling, reason why selling pressure is coming in is because we had that resistance, fake out, breakout. That's the start of our reversal pattern. Would like to get in short on the NASDAQ. Maybe we can. Let's go back to the NASDAQ. Just kind of choppy. I'm trying to find a clean support level to take a break down through, but as it's coming down into here, you can see it's getting a little bit choppy since this was our 2 candle flip zone. So I don't want to look to go short too soon. I want to wait for price to clear our 2 candle flip zone, which is going to mean waiting for price to break below 17,814. Unless we form a new support up a little bit higher, then we could look to get in sooner. In the meanwhile, I'm just going to wait just because, again, it's pretty choppy where it's at now. Wouldn't be leading to the cleanest breakdown. Would have wanted to get in up here around 17,900 for that. Let's see, S&P. Same thing here, coming back down, but not really a good entry point for a breakdown. Russell we're set up on. That one gave us a little bit better entry point on the micro contract. Looking for that breakdown below support. Rallying right up into our 2 candle flip. And then let's see the Dow if we have anything here. I'm seeing when I'm looking left is that where price rallied to and fell from is that it's right above, or it's right at that point where we had a controlling breakout pivot to the left. So notice here we had support. Here was that last pivot before the breakdown, and that's exactly where price tapped before pulling back. So there could be a decent amount of selling pressure coming in that we'll want to keep an eye on for a breakout trade short. I'm going to come down to the 1 minute. And not really a good support area for a breakdown. I'd look to take a breakout trade short below 38,501. I'm just not seeing it as a clean support area. Let's go back up time frame. See the 5 minute. The picture doesn't look quite right. You know, don't take the trade, adjust the time frame until you see a better picture set up. It's just not the greatest looking picture, although I do want to go short. 3 minute. Oh, there we go. Okay, so here was our support. We've got the breakdown already. I missed the breakout trade, but our short entry, if you want to take the 2 candle flip, we've got it right here, 38,530. Stop at 38,554. So 2 candle flip. It's on a 3 minute time frame. You can set up the short entry, waiting on the pullback. I'm gonna wait to see if we can get a bounce off of this support down here. So here's an area where price was hitting support many times. I'm gonna look for price to come down here first, bounce, and then take it as price comes back up to that 2-candle flip zone. Which we're getting close. Hey, Kelly, what is the risk price on that zone? Yeah, let's see. So it's coming up faster than I thought. 38,530 to 38,554. That's going to be 24 points on the Dow. Coming out to our grid here to see what the point value is in tick value. $5 per tick, which is the same thing as the point value. So if it's $5 per tick, you would do 5 times the size of the zone, which is 24 points. So that would be $120 worth of risk. So I'm going to take that. Good question. Again, always good to calculate your risk ahead of time. So sell custom with stop 38,530. Buy stop 38,554. Okay. So we're in on our Dow trade. 2-candle flip zone that we identified on the 3-minute time frame. So we'll keep an eye on this one and looking for that pullback. Was anyone able to get in on our 2-candle flip? Nice. Going over a little bit on time, but we last minute got in on that 2-candle flip, up about 50 bucks at this point. Again, careful with this week just because of the FOMC announcement coming up. It is going to make the market conditions choppier as a whole. So as we come out to Econo Day and start to wrap up today's session, FOMC announcement is going to be on Wednesday at 2 p.m. Eastern, followed by the Fed Chair press conference at 2:30 p.m. Eastern. There's no other real economic reports today, but tomorrow will be consumer confidence at the 10 o'clock reversal time. Thursday, jobless claims, Friday, employment situation. So moving forward, there is going to be a lot of economic reports coming out that are going to cause significant volatility. The main one, however, is going to be that FOMC announcement at 2 p.m. Eastern. So let's wrap up again what we've covered today. And a little bit of a pullback. If you're not in on the breakout, you can always look to take it as a confirmation entry as price leaves that zone. Let's go back up to our hourly chart. Yeah, so to get a little bit more confirmation, you'd want to see that break down. We're getting in a little bit sooner based on the 2-candle flip. If you want to wait for the breakdown, you'd be waiting for price to break below support at 38,457. We also set up bonds and crude oil. Let's see where we're at on those ones. On bonds, we're still waiting for that breakdown. We did have resistance, breakout, pullback. So we're waiting for price to break below support. Getting pretty close to that entry, just waiting for it to trigger. And then our stop is placed above our wick over wick. Lastly, we're also set up for crude oil. Either that short trade in our 2-candle flip or the breakdown. Haven't really moved anywhere all of today's session on crude oil. But keep an eye on that 2-candle flip above, looking for a short entry at 83.88. Stop at 84.11. Or taking the breakdown is going to be taking the breakout short below 82.96. You can also set up alerts where price starts getting below 83 0.08, for example. You can get an alert triggered so that you know to pay attention to crude oil, set up the trade, or if price starts getting closer to your zone, then you can look to set up the short trade entry. All right, and then equity indexes. See, we didn't want to go short too soon on the NASDAQ. 2-candle flip zone is holding. I was a little bit hesitant with all the selling pressure that we were seeing on the equity indexes. Buying is coming in at this point. Just be cautious that if we do start to see a drop, the Russell is the one that we have this set up for that wick over wick reversal. Other equity indexes, again, moving higher. Still not enough indication to go long at this point. I would say the sellers are still in control based on the fake out breakout reversal. But we just want to keep an eye on how things pan out moving forward. And then again, lastly, Dow. 3-minute. There we go. A little bit more confirmation. Again, choppy market conditions, take profits ahead of time. If you're up on your Dow trade, always good to lock in those profits and then find another entry to get back in if you so choose. But up $50 now, just one contract. Manage your risk. If you want to bring your stop down, you can do that as well. But I'll be keeping an eye on Dow moving forward and see if we can get a little bit more momentum to the downside. Thank you all for being here today. Have a great rest of your day. We'll do this again on Wednesday, same time, same place. And if you guys have any questions at all, please feel free to reach out to me at tradingcoach@katetrades.com. Thanks again, everyone, for being here. There we go again, some more momentum now. Great job, everyone who took the Dow trade. I'll see you guys all on Wednesday. Thanks, Patrick. Thanks, Callie. See you guys all again on Wednesday. Have a great day, everyone. Bye-bye.